Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on Cell Therapeutics Incorporated, traded under the symbol CTIC. Bear in mind as I annotate this chart, this is the daily chart, meaning every bar and or candle before you represents one session worth of price action. First thing I'd like you to note is that I've used this vertical line in white to separate the price action following Wednesday's trading session apart from the preceding 6 months. So this period right here. And what I'd like to do here is focus on this period right here and then end off with concluding remarks concerning Wednesday's trading session and potential events going forward. Let's begin by adjusting a supporting trend line, or rather implementing one here. So what I've done here is I've drawn this supporting trend line, meaning this is the mark we'd like to see the price hold above in future trading sessions. How did I come up with this mark, or rather how did I come up with this trend line? Using this low right here, this higher low at 92 cents, this low right here, this one here, as well as this one here. So as you can see, ever since the price broke down below what was once a supporting level over here, this became resistance. The logic behind this is that as supporting levels are broken below, or rather as the price breaks below supporting levels, they become resisting levels, just as when the price breaks above resisting levels, they become supporting ones. So it works both ways. So this became resistance. As the market broke down, it once again tested this resisting trend line, was unable to break it, and showed weakness in the market. Price pulled back, found support at this supporting trend line, rallied, pulled back, once again found support at this trend line, as it did over here, rallied, pulled back, found support just above this trend line, and it was not until mid-December or so that the price tested the 130 mark once more, or the $1.30 per share mark. Once again, the market was unable to break past this key breakout level, or key resisting level, broke down, found support, and it was not until Wednesday's trading session, so here's where Wednesday's trading session comes in, that the price did break above this mark, and as a result this becomes a key supporting level. So in the event the market does pull back, what we'd like to see happen is see this 130 mark hold. That would be very bullish from a technical perspective. Furthermore, what confirms this breakout is the volume that came in on Wednesday's trading session, as shares of Cell Therapeutics Incorporated appreciated 14.53% to end the session at $1.34 per share. Some like to argue that technical analysis plays no role when it comes to certain stocks that they favor or they enjoy a fundamental perspective on, but in fact, as I showed you, had Wednesday's trading session not occurred yet, so had I been annotating this chart just based on Tuesday's trading session, I would have drawn this very same pattern because it had not really depended on Wednesday's trading session whatsoever. But what we saw was, and let me just bring that back to how it was when I began this video. What we saw here is a chart pattern known as the ascending triangle, and in general this is a bullish chart pattern, meaning as higher lows are made, that key breakout mark, and in this case $1.30 per share, will be tested and more than likely broken on above average volume. So this is textbook material right here, especially with the breakout that came on Wednesday's trading session. More importantly, what I look for personally is, following any sort of technical breakouts, I look for the following trading session to confirm this breakout. So what I'd like to see again is the 130 mark hold. If this mark does hold following Tuesday's trading session, I would consider this to be a bullish market. Not only did we break past that key breakout level, but also several moving averages, the 10-day, the 100-day, and the 200-day simple moving averages, right here at $1.20 per share. So now this mark offers support. And as you can see, if you were looking at this chart from an even shorter term perspective, following, let's say, Tuesday's trading session, this would have offered resistance at the 120 mark. However, you also would have drawn in another supporting trend line using that low at 105 and these lows right here. And again, you would have derived a shorter term ascending triangle, and as you can see, whoever does play the technicals obviously caught the signal, more than likely bought in just based on the breakout of 120 per share, and more than likely is sitting quite comfortable with their position in the event that they didn't just day trade it. But in any way, we did break past the $1.30 per share mark, and if you are long on Cell Therapeutics Incorporated, that's a mark you want to see hold, and hopefully you see above average volume come into the market once more, because that would signal bullish activity. So assuming that the market does appreciate in price and bullish activity does continue to occur, what we'd like to see happen is market test resisting levels at the $1.40 per share mark. So we'll indicate that with this trend line in red. Let's just adjust that, stretch it out slightly. Okay, there we go. Followed by the 145 mark. So we'll use another trend line to indicate that. And I'm deriving this level basically from what appears to be support dating back to this area right here. So as you can see, before this rally to $1.83 per share, or rather $1.83 per share, the price found support at this 145 marker. So these are two key levels to focus on in the event that you are a Cell Therapeutic long and you're looking forward to the market appreciating in price. Following the 145 mark, the 157 mark will offer rather significant resistance, just based on the fact that the market made a high right here. Followed by which you have resisting levels dating back to this area right here, and of course the most important one being the peak at $1.83 per share. Well, let's just leave it at that. So to quickly wrap up, resistance at 157, 145, 140, key support at 130, 120, and this ascending supporting trend line right here. So in any event, this is a must-hold trend line, something that the price shouldn't break below if there is any sort of strength in this market, even on the long term, or rather from a long-term perspective. So once again, this was Edward Stevenson from TimelessWealth.net. I encourage you to visit my site, tune into some of the materials I recently added, including all sorts of publications, articles, educational materials, and join my free newsletter for overlooked trading and undervalued investment ideas. Thank you for listening.